Good afternoon. Welcome to this edition of We Got You Covered. Each week we come to you and we talk everything insurance, employee benefits related. And this week we have with us a very dear friend of mine, Jim Christenson. I've known him for quite a while. He's definitely an industry expert and his intellect is just off the charts, and I really believe you're going to enjoy today's conversation. So a little bit of background on Jim. He is the president and CEO of Voluntary Benefits Specialists. He has over 30 years experience in this business. He speaks nationally at various conferences throughout the year. He's worked for Emerson Reed, he's worked for American Fidelity, and he's worked for Allstate Workplace Benefits. And from a civic standpoint, he's also a fundraiser for the Media Youth Center, which we'll talk a little bit about that towards the end of the show. So today, we're going to talk about voluntary benefits and how to educate and communicate benefits to the employees the proper way. But before we begin, I always like to throw out a few statistics on our topic. So there was a Harvard study done a few years ago, and they indicated that 62.1% of all bankruptcies filed were for medical related expenses. And then follow-up surveys showed that the 1/3 of Americans have more than $1,000 in the bank. So that means that 2/3 don't, right?
Yes.
So that's a staggering survey. And with those surveys, you're going to see different surveys out there. Some will say 60% bankruptcy, some will say 40%. When you file for a bankruptcy, you don't have to put down what the bankruptcy is for or what caused the bankruptcy. So these were surveys done after the fact and if some, by different organizations. So with that said, we talked about today's program is going to be on voluntary benefits. So Jim, what exactly are voluntary benefits?
I think the simplest way, Rob, to say it is voluntary benefits are anything that you're willing to pay for out of your paycheck that would be in addition to your employer paid benefits. So they could run the gamut from insurance type benefits like critical illness insurance and accident insurance. Sometimes disability insurance isn't provided by employers, which is a very important coverage that I'm sure we'll talk about. Life insurance, it could be pet insurance, could be auto and homeowners insurance. There might be a discount for a group, could be identity theft, and so it could be legal, some kind of legal program. So there are numbers of things that employers offer their employees that they don't pay for, that an employee can voluntarily have done through payroll deduction.
And the employer can pay for some of those benefits, or they can pay for part of those benefits as well.
There are a number of cases where an employer will say, here's my menu of benefits. We're going to give you this for health insurance, or we give you this amount of money to spend, and you can take that money and spend it how you see fit. And a lot of times what an employer will do to support a benefit, say in the case of an employer that may be too small to afford to be able to provide disability insurance, they might say, we're going to give you $10 every 2 weeks towards disability insurance. Whatever benefit above that is, you might pay the difference.
You might pay. So typically we're talking about core benefits and then ancillary or voluntary benefits. So core benefits could be defined as medical, dental, vision, prescription. They're typically your top four.
Right, dental and vision, of course, as you know, can be voluntary also. Sometimes employers don't provide those and employees have to pay for them on their own.
Now, towards later on in the second half, we're going to talk a little bit more about the value of life insurance and disability because there's some staggering statistics there as well. So on these voluntary benefits, we know health insurance costs a lot of money, right? Single health insurance rates could be $700, $800 a month, where 20 years ago that was more than the family rate, right? How much do voluntary benefits cost on average?
Voluntary benefits on average, $10 to $20 a week, I would say. It depends on the person, on what you're buying. But voluntary benefits are designed to be affordable to employees. The companies that provide those benefits try not to make them unaffordable. So you could spend a lot of money on voluntary benefits if you want to, but I'd say the average payroll deduction is in that $10 to $20 range.
Not bad, not bad. And you as a consultant, when you meet with these employer groups, you know the demographics, so you know the average salary of the employee. So if they're on the lower paid scale, say more of a blue collar worker, and there are some high paid blue collar workers, and that's good, but let's just say somebody's making $40,000 a year, you're not going to go in with options that are $40 a week.
No, there's an old rule in our business that's one pretty much all of us live by, 1 to 1.5 times hourly earnings. Now there are exceptions to all rules, and there are a lot of times where I'll go into a business where, say, a worker has a a spouse that is in some sort of independent business and they don't have insurance. Maybe they're doing plumbing or electrical, and so they'll try to buy benefits on a voluntary basis for that person, and then you'll see higher deductions per paycheck.
You know, you mentioned something very interesting for a spouse or family. So I'm working for a company, they're offering me these voluntary benefits that I can pay for, but it's not just for me. I can buy these for my wife and kids as well.
Oh, absolutely, absolutely. They're almost always all available for employee children. They have 4 or 5 rate schedules, but generally it's employee children, employee spouse, and then what they call family, which would be employee spouse and children.
So in one of our earlier programs from a few weeks ago, we were talking about communicating and educating employees about their benefits. And, you know, the old rule is, you know, the old style was you have a benefits booklet that's 30, 40 pages. There's terminology in there that's required by the insurance companies.
Right.
Most insurance professionals probably don't understand a lot of those legalese, let alone an employee who's not really educated in benefits and the employee and the insurance space. So how do you tell employees about these programs? How do they know?
There are a number of ways of doing it. I mean, we used to go in and just sit down with an employee and talk to them about the voluntary benefits, so you could reference their existing benefits. And I'll give you an example. I would never do a voluntary benefit program without knowing specifically what are the co-pays in your hospitalization insurance, your health insurance, what's the deductible, what's the maximum per year that you could possibly pay, what is the employer providing as far as leave goes, is there a paid leave program, is there paid disability insurance. So really understanding an employer's core benefits. Without doing that, you can't really help an employee choose what's ever proper for them to own on a voluntary basis. But it could be what we would call face-to-face enrollment, where the employer says, sure, you know, every employee can have a meeting with a benefit counselor for, say, 20 minutes or something like that. It could be a call center. We do lots of call center things because we have companies like a grocery store chain or a hospital, for example, where they're practically working all the time. And it's hard to get in there. That you can't stop stocking a shelf at 4 o'clock in the morning, or there's nothing for people to buy when they get there at 6. So a call center will allow us to give them that kind of coverage where they can call when they're off of work. And a lot of people like to be with their spouses to make voluntary benefit or any benefit decision, really involve them in that decision. There's printed material, and like you said, sometimes printed material is really hard for, we'll call them laymen. You know, as insurance people, when you hand me a 20-page insurance certificate, I know that 18 pages of it are standard language that are required by the state we're doing business in. So I don't need to read those, I know what it says. I just need to go to the 2 pages to find you the exceptions, the limitations, if you will, or the adjustments that might be in a policy, which consumers should know about, and also what the coverages are. What do I get? What do I have to do to get it? You know, it's as simple as doing it. So call centers, most enrollments at this point in groups over 100 are done online. And so we provide videos. So if you come to, you make your health insurance choices, maybe you see the critical illness, or what is critical illness insurance? I've never heard of that before. There might be a little video there or a little page that explains it, or a frequently asked question box that you can go to. Unfortunately, that doesn't give you a lot of information on which to make a decision. And sometimes people aren't aware of the real basics of insurance, which is the purpose of insurance is to insure us against losses that we can't afford personally. And in the old days of insurance, as you know, Rob's taught insurance at Temple. Rob knows what I'm about to say. What we were trying to do is mitigate risk. So I own a house. Really simply, it burns to the ground, I can't afford to rebuild it. You own a house, it burns to the ground, you can't afford to rebuild it. We get 100 of us together and we pay money into a pot so that money can be pooled amongst us at a lower cost and rebuild our house as it burns down. So the purpose of insurance is to pool funds in order to pay people for losses they can't afford. So you really have to calculate, when you go back to say your less than $1,000 savings, which we find shocking, but we were all young once too, right? And we've all been in that position at some point in our life. You know, that's when you need insurance. When you don't have money, you need insurance. And when you have money, now you need less insurance. If you have a health insurance plan that pays $1, you know, you don't need something that helps you with co-payments and out-of-pocket costs. You know, you just don't. So you have to make a decision based on knowledge. So even if I saw a little video, and I know this is tough, but you know, while you're online, maybe hit critical illness insurance and get, or accident insurance, or disability insurance. What's the importance? It doesn't take long, 5 or 10 minutes to educate yourself.
Yeah, and in the Harvard study, the average amount that somebody was in debt for those medical expenses was $7,500. And that's what caused them to file bankruptcy. And they could lose their house, they could lose a lot of things. So yeah, insurance is definitely important to have. And as you said, $10, $20 a week, it's really affordable. One of the things you mentioned was paid leave. And in an earlier program, we did talk about how these policies can be what they call portable. So what do they mean by portability? So if I leave and I have health insurance, I can do COBRA for 18 months. What about these other voluntary benefits? Can I keep them for 18 months?
Again, it depends on the carrier and the type of coverage. So unbeknownst to anyone other than maybe you or me or the person that's enrolling the product, we have group products and we have individual products. So, and a group product and individual product sometimes look the same. So we talk about chassis. Now there's no physical chassis like a car, but it's the actual rules that policy is set up on. So a group life program, a voluntary group life program, term group life program that might be provided. So your employer gives you $10,000 worth of life insurance, but you can buy more for your family. That product would be convertible, meaning that you couldn't take that product with you when you left, but you could convert it to another type of insurance for whatever your face amount was, the amount you're insured for. So $10,000 in this case would be the face amount. And I can convert that to, say, another type of policy, not term, whole life. So it's going to be more money, but it's going to be the same amount. And if I'm uninsurable, I have a heart condition, I know I have cancer, obviously I would convert that policy. But a truly portable policy is one that I can take with me. Now, generally, group products are convertible and individual products are portable. But that's not true all the time. In the worksite business, we use group products that are completely portable, meaning whatever the price is I'm paying for it now, I will pay when I leave, and I can keep that product for as long as I want to keep it.
Perfect, Jim. I hate to interrupt you because that's very complicated and it's a great topic. We have to go to a commercial break and recognize our sponsors. We'll be right back in a few minutes with Jim Christenson talking about voluntary benefit insurance.
Brand awareness. But what is your brand? According to Forbes, it's a combination of your logo, your product, your design and feel, and your personality. Did you know that aside from being a guest, we offer even more opportunity to boost your brand? Adding your company logo and website on screen during your interview will allow viewers to recognize your brand instantly. Incorporating images and video clips is another great way to showcase your product during your live segment. Let viewers see how good you really are. And most importantly, there's you and your interview. For less than the cost of a newspaper, direct mail, or a magazine ad, you can leave our
episode of We Got You Covered. We're sitting here with Jim Christenson and we're talking about voluntary benefits, the advantages of them, the cost, and the types that are available to employees in the workplace. So Jim, we were talking about chassis and this and that, and that's very complicated, but at the end of the day, we know for the most part, if an employee has a voluntary benefit and they leave that employer, they can take it with them.
Yes.
We'll keep it real simple.
Yes.
We'll follow up on a more legal definitions in another episode, because that could be 3 hours, right? You mentioned several products. The one product you mentioned was critical illness and accident. Can you give the audience a little bit of an idea of what critical illness is and what accident is?
Yeah, critical illness insurance pays a lump sum if you're diagnosed with a covered critical illness. Heart attack is the leading cause of death, so that's covered by a critical illness policy. Cancer is the second leading cause of death, and that's also covered by that policy. There are other things like stroke that are covered. So you have a group of benefits of things that happen to you, like paralysis, that would be really financially costly for you. And you know, health insurance will only take you so far. If you've ever known anybody that had cancer or has a heart attack, or especially a stroke, the rehabilitation, it takes a long time. People from your family have to come and help you. It's not just what the health insurance doesn't pay, which is sometimes a tidy sum, but it's also what other costs that you're going to incur that you don't realize, even if you have good disability insurance. So when I say lump sum, you can buy a policy for most carriers from $5,000 to $100,000. That money goes directly to you upon diagnosis. So I have a heart attack, I call the insurance company, I send in my claim form, whatever I need to do, and I get that amount of cash up front. So it goes in my bank and I have money to spend. You know, a common example of what people have done with critical illness insurance, sometimes I've heard it's like a Make-A-Wish foundation for adults. I have cancer, I got $10,000, maybe I'm going to go on that last trip. But you know, putting that sort of laughter aside, the funny part of it, You can get testing, say, genetic testing, to see if you can find a drug that can be specifically made towards your cancer. That's money that your health insurance isn't going to pay for, but do you have a chance to do? So it gives you some real freedom to have that cash.
Or if you want to do an experimental treatment, that's definitely not covered by major medical insurance, right?
And I think people should know that when you hear the word experimental, you often think to yourself, oh, it's something that they've only tried on rabbits or something like that. That's not true. Experimental drugs have gone through all 4 levels of Food and Drug Administration testing. It's just that they haven't been approved by the health insurance company, and that's why they become experimental. Until a health insurance company approves them and they're used every day, they can be totally legitimate drugs that could help you. They're just not covered.
And those are the things that cause that bankruptcy and that $7,500. So if I had a $10,000 critical illness policy and I had a heart attack, if I died with the heart attack, that's what life insurance is for.
Right.
But people are living through heart attacks because of medical advancements in medical technology and these drugs and so forth. So now I have a heart attack, I get this lump sum benefit, and that can actually prevent me from going into bankruptcy.
Yeah, absolutely. And I think that's probably the most phenomenal things of the last 10 years. I mean, cancer survivors are now 83% of people survive cancer. That was the exact flip number 10 years ago. 83% of people died of cancer.
Wow,
so,
wow.
Yeah.
So what about accident insurance? Because I know, depending on what side of the table you're on in our industry, accident insurance could be what they call accidental death and dismemberment, or AD&D, which basically means if I die in a car accident, it pays $100,000. If I die in a plane crash or in a bus, or somebody comes and pushes me down the stairs by accident and I die, those are accidental deaths. They're not medically related. But your accident plans are a little different.
Yes, and again, statistically, I like to go to the Center for Disease Control whenever I have a question about whether something is worthwhile, and just statistically look at it. Accidental deaths, according to the Center for Disease Control, are only 4% of all deaths. So why would I buy insurance that doesn't pay for the other 96% of causes? But accident insurance pays, the most common accident for people is falling down the stairs. 50% of all accidents involve the stairs. We've all done that slip and maybe caught ourselves. Some of us may have fallen. But I break a leg, okay, or I have to go to the emergency room. Typically, people buy these products because they have kids that play sports, and airplane or motorcycling may not be covered, but common sports are. So I sprain an ankle. You have to go to the emergency room. All health insurance policies now have deductibles for the emergency room. They could be $100 to $500. I haven't seen much higher than $500, but these policies help you give money back. And the best part is they're inexpensive. So an accident policy, you might be able to buy a good accident policy for yourself for $100 a year. It can be pre-taxed under Section 125, so like your health insurance premium, you don't pay federal or FICA taxes on those. The same thing would happen to that accident plan. And sometimes they contain other benefits like wellness benefits where you get money back from them. So if it's $100 a year pre-tax and maybe it's costing you $75, if you go to the emergency room once in 2 years, that more than pays for the policy.
So you did, just to clarify, you mentioned Section 125. Mm-hmm. That is a federal regulation, Code
Correct.
Section 125, just like Code Section 401k.
Right.
And it's federal, Social Security, Medicare, and state, except in New Jersey. New Jersey's the only state
Yes.
that doesn't allow that to be
Correct.
a tax-free benefit. But you mentioned something that was very interesting, and I really didn't know this. So 4% of accidental death and dismemberment policies pay. So the other 96% can be covered by your type of accident insurance for $100 a year.
Well, it still wouldn't cover accidental deaths, but
Right.
it would cover the real things that happen to you.
The
in
other
an accident.
96%, right?
And the other thing, I mean, as far as all accident policies have some kind of a rehab benefit, although it's not a major part of the policy. But a lot of health insurance plans now, Rob, are limited to the amount of rehab benefits I can get in a calendar year. I've seen it as low as 10. So this is money that goes directly to you that can really help you get well.
And if I have a $3,000 deductible, little Johnny's playing football, breaks his hip or breaks his leg, now I have to go to the ER. So now I have an ER visit, which is expensive. They're going to have to take x-rays. They may have to do surgery. They have to put a cast on it. They're going to provide him medication for, say, antibiotics to stop an infection. And just that one little visit could be $3,000. If I had an accident plan, because I had an accident, broken leg or whatever, and I have x-rays associated with it and other things, that accident plan could possibly cover that $3,000 deductible.
Very possibly in that case. So each one of those things that you mentioned, the x-ray, the visit to the emergency room, the actual break of the leg, they would all be signed a value in that accident plan, and I would receive that cash directly for that.
And that could cover my deductible.
Absolutely.
For $100 a year.
Yeah.
So I can buy basically deductible insurance for accidents.
For accidents.
Yeah, pretty interesting. And there's some other things we can talk about later on. So if I were to ask you, what are the 3 most commonly asked for voluntary benefits today? 3 to 5.
I'd say that the 3 are critical illness and accident insurance. And I'd say behind that there's other products like pet insurance, student loan programs. Hospital indemnity insurance seems to be on the rise because there seems to be per-day deductibles in health insurance plans for going into the hospital. So a hospital indemnity plan would pay you a daily benefit while you're in the hospital. Usually they're $100, so you get more for the first day, maybe $500 or $750 or $1,000, and then I would get $100 a day. So I'm seeing more and more of those become popular. But I think that where there isn't disability insurance, disability is always the most important. And I think after that, critical illness, accident, and life insurance would be the next most popular.
I saw a study where you're more likely to you're more likely to become disabled before 65 than die.
The last statistic is you are going to be disabled for more than 90 days. 1 out of 12 people will be disabled for more than 90 days before you turn age 65. So if you said to me, I'm only going to let you have 2 kinds of insurance for the rest of your life, I would say health insurance would be number 1. And I know that people look at me and they say, well, I've never even collected on my health insurance, it's a pain to use, blah, blah, blah. It doesn't make any difference. You don't understand how fast you can get to $1 million on a cancer claim. Literally in months you can get there. The second kind would be disability insurance, because without your income, you don't have a place to live, you go bankrupt. You have to have an income, because even if you end up on COBRA on your health insurance, you have to pay for it to be able to use it, right? So I'd say that those are the 2 most important. The third one, I would always put critical illness insurance. Just because, again, if you go to those stats at the CDC, your incident of getting cancer, you're probably going to get cancer. I mean,
yeah, I think the
probably
stats
going
are
to get it.
1 in 2 women and 2 in 3 men.
It's crazy. Yeah. And it might be just light. It might be something that can be taken care of easily. But again, you're going to need some money when that happens to you.
And if you look at critical illness insurance, let's say you have a medical plan that just pays every type of expense and coverage for you. When you're going through chemotherapy and radiation therapy, let's say it was a stay-at-home spouse and they have young children, now you have to put the children in daycare. And there's a cost associated with that. So when you get that lump sum check, you can spend that on anything you want. You can pay your mortgage with it. Let's say you're out of vacation days, you can use it to cover your salary. I mean, it's not disability insurance, but it gives you the lump sum. So I think that's a very valuable benefit today.
It's basically a disaster fund.
Let's talk for a minute about life insurance. I know that's not on your top 3, but again, further statistics show that the only life insurance that an employee has is through their employer. And typically it may be 1, maybe 2 times their salary. But today, let's say the salary is $65,000, you have $130,000 of life insurance, and you're a millennial and you graduated college and you're 5 years into it, your student loans are probably more than that. And then if you're married and you have a house and a mortgage and all these student loans, how important is life insurance on a voluntary basis if the employer offers it, outside of just the basic coverage that they provide?
I would always advise an employee, if an employer offers additional term life insurance, at least buy what the guaranteed issue is, whatever you don't have to answer health questions for. So guaranteed issue means that they will provide you this insurance, no questions asked. And generally those amounts might be $100,000, they might be $180,000. It depends on the size of the employer and the amount of people in there, but at least do that. You know, when we were coming up in the business, in the late 80s, we always had a plan to basically, we have a 401k and we have life insurance. So I had 4 kids in 3.5 years, as you know, which was kind of wild. We had twins for our third one, so don't think I'm magical. But we didn't have any money. So at that point, I had life insurance, and I'm talking about like in 1986, I probably had $500,000 worth of life insurance, and my house was worth $200,000 at that point. That same house today is worth over $5, but that's how much life insurance I had, because the idea was that if something happened to me, my wife still had 4 kids to take care of, a mortgage to pay, I wasn't going to leave my family in the street. But by the same token, I was saving money in my 401k. So at some point, as my kids got older and graduated, my house was paid for, my 401k funds grew, my need for life insurance went down. But that doesn't mean that you don't need life insurance. Everybody needs
Right.
some.
I'll tell you, this was great conversation today, and obviously, as I said in the beginning of the show, you are intellectually off the charts when it comes to this stuff. And I know your expertise is disability insurance. So Jim, if anybody has any questions about voluntary benefits, disability insurance, critical illness insurance, how can they get in touch with you?
I think go to my website, voluntarybenefitsspecialist.com. Pretty easy, voluntarybenefitsspecialist.com. And you'll see a link to hit my email. And I'll be happy to return your calls or speak to you.
Well, I'd like to thank everybody today for tuning in to We Got You Covered. We've had a great conversation with my dear friend Jim Christenson. Jim, thank you for being on the show today. It
Thanks
was
for
a pleasure.
having me. And
Pleasure
it's always good to
having
be
you.
with you.
Yeah, and we want to have you on another program, absolutely. And this has been great. So again, thank you for having me into your house and businesses each week. Have a great weekend. And remember, when you have the opportunity, please pay it forward. Thank you.